Well, joining me now is Joy Yang, Head of Product Management at MarketVector Indexes. Joy, it's great to have you on the show this morning. Let's start with trade. Of course, hearing remarks from the president earlier, reciprocal tariffs on the EU coming down from 30% to 15%. What is the impact that you're seeing in the market?
Yeah, so significant news starting the week, but the impact still is unknown. I mean, we're getting the numbers now, but I think there's still the issue of how long will these numbers stick? What's the retaliation? And we've seen some noise from Europe, backlashes now, but also, more importantly, what are the ultimate consequences on who's actually going to pay for the tariffs? And still surprisingly, people don't understand it's corporate America that's paying for it. And we know when businesses, when their costs rise, they're going to pass it on.
Yeah.
And then, we're seeing kind of last week we saw this really significant pop in meme stocks again. So that seems to me people are ignoring some of these risks in the market.
Interesting. Yeah. Well, we see the market right near record highs, right? Certainly on the S&P 500, stocks have climbed this wall of worry, as you're alluding to there. And I think this week in particular, the Fed very much will be in focus. Inflation has not really ticked up, but what are your models or your research showing in terms of what that risk could portend for equities?
Yeah, so the Fed is still cautious. Inflation hasn't ticked up, but it's still above target, and the data hasn't been convincing. So I think, what we're seeing is these large asset owners, institutional players, they're sitting on the sidelines still because it's not really clear on exactly what's going to happen.
Yeah.
But again, we're seeing, another part of the market really optimistic and jumping right in because they're eager to trade, right? And this is very clear that there's now this divergence between individual retail investors and large institutional asset owners. And I think that's clearly the result of social media, but also the availability of online trading platforms in real time, and more importantly, AI, which is kind of giving the same answers to the question around what should I buy.
Interesting. Okay, so can you talk any more about what's driving the euphoria at this point in time?
Well, I think individual retail investors are, they're eager to jump in and trade, right? They're not sitting on the sidelines. Also, but they have this, uncapitalized wealth effect from the markets going up and up and up. And also they're interested in just sticking it to the smart money.
Interesting here. So in terms of how it's playing out, you mentioned the meme stock frenzy. What are the flows telling us?
So we've seen record flows into ETFs, and I think this is also interesting because now you can ETF anything, right?
Yeah.
We're seeing access to investment strategies that individual investors never had access to, and that's private credit, managed futures, leveraged stocks. So that's a choice of availability, and people are jumping in trying to access those investment strategies.
Yeah. Two assets, if you will, that we've seen just gain astronomically of late, certainly Bitcoin and gold. How do you look at the two when it comes to investing, and are they the same or are they increasingly diverging?
And again, they're both store values, but they're increasingly diverging, as you mentioned. And what we see this as a reflection of asset owners, large central banks. They trade gold, but it's been range bound because they're waiting on the sidelines, and it's actually also August, so it's summer vacation.
Yes.
But Bitcoin, also a store value. Individual investors are jumping in. We've seen record flows into Bitcoin ETFs, and now Ethereum ETF last week had record flows, because we're seeing the regulatory clarity around cryptocurrency and the ease of, again, being able to ETF these assets.
So in this environment, what do you think it is important for our viewers, potential investors, and or traders to understand?
I think it's still go back to sound investment principles. The risks are still there. It's still not clear how everything will play out. So think about diversification. I think it is important to look at alternative assets like gold and Bitcoin, but more importantly, think about your concentration risk. This week we have earnings report again.
Right.
Think about, Mag 7 may turn into Mag 2 or 1, but also, your concentration risk in U.S. assets and U.S. risks around tariffs and the dollar. So look beyond, U.S. equities and bonds.
What is your outlook for the dollar?
I think, if the tariffs play out, it could have lower dollar consequences. So that's why gold and Bitcoin are still such strong assets in this environment.
Yeah.
But, who knows?
Yeah, we'll see indeed. Well, a lot to get to this week. Joy, we always appreciate you joining and sharing your insight here at the Stock Exchange.
Thank you so much.
That's Joy Yang, Head of Product Management and at MarketVector Indexes.